I'm going to skip a couple of the intro slides. Happy to share this with anyone who might be interested. But as I said before, I'm Percy Nikora with Penn Capital. This is the deal that we just closed is our 15th syndication. And we also have a $50 million fund. The opportunity that's available to us is this 204 unit property in Lubbock, Texas. It was newly constructed in 23 and 24. And in April of this year, it was appraised at 35.8 million. We purchased it for 29 million. So it's a $6.8 million less than what it was appraised at in April. There's a reason for that. I won't go into it. It is 98. Actually, right now it's pretty much fully occupied. The only unit that is not occupied is the model unit. It's a Class A property. Surrounding this property, all the single family houses are $500,000 to $1.8 million. So it's in a nice location, new school district. And there's a similar to Houston that has an inner and outer loop. They're building an outer loop in the area that will be completed next year. And it's about one of the exits is about half a mile from the property. So we really like this area. Inventory is low. In the next year, there's somewhere between 200 to 600 units that have been projected, which should be absorbed pretty quick. In this particular property, we actually have an institutional investor coming in as well. So we're raising about 12 million. 6 million is from an institutional investor. The other 6 is common equity. Like I said, we've already closed on the property, but we're backfilling a couple spots that we have. This gives you a little bit of an idea of the interiors of the property. It's more of a modern look. It's a townhouse style property. So there's nobody living above you or below you. Everybody has their own unit with their own entrance. So people tend to like that. A little bit about Lubbock. Lubbock is actually seeing a population increase. They're projecting 11% population growth in the next 5 years. It's also home to Texas Tech University. And a lot of Texas Tech has about 41,000 students, established over 100 years ago. But it's also attracting a lot of businesses. So obviously, Texas is a very business-friendly state. Lubbock is starting to see and attract a lot of businesses. There are 2 health centers there. And believe it or not, there's a $1 billion dairy manufacturer from Italy that makes mozzarella there and exports it to Europe. So I never knew Lubbock exported mozzarella, but it does. In terms of finances, like I said, we bought it for 29 million. All in, we're just over 30 million. We have fixed rate debt on it at it's around 6.2%. 5-year term, interest only for the entire time frame. 65% LTV. So it's a pretty safe debt, if you will. And then the rest of it, like I said, we have a preferred equity investor and common equity as well. Projections, etc. You're not going to be able to see it here, but I'm happy to share this slide with or the deck with anybody who may be interested. From a rent growth standpoint, the rents are a little bit below market. So we have an opportunity to titrate those rents up. We are also going to manage the property ourselves because we're vertically integrated. And part of what we do is provide things like high-speed internet to everyone, so like a bulk internet service. Residents get it at a cheaper price than they can acquire it from Google or AT&T. And we also get a commission on the back end. And all of that goes straight to the bottom line, right? So we increase the NOI. And as you guys know, for every dollar we add to the NOI, you're getting a multiple of 17 to 20 times that amount in the value of the property. So that's really our really play here. It doesn't need any deferred maintenance or any upgrades, so to speak. Sales comps, the average comps have been about 190 per unit. We're buying it at 143 a unit, or actually a little less than 143 a unit. We have 2 classes of units that we offer in our LLC or in our syndication. One is a fixed 10% class. So if you come into our Class B units, you get a 10% APR paid out quarterly, right? So for those who want cash flow, that's what you can get. The other class is Class C, which is an 80-20 split. So 80% goes to the LPs all the way through. There aren't any additional tiers there. So that comes to roughly a 20% average annual return if we hold it for 5 years. Realistically, we're looking at exiting somewhere between year 3 and 4. So that will be a pretty relatively quick exit. The important thing is you can mix and match these units. So if you say, I want a little bit of cash flow, but I also want the upside after the sale, then you can do that. And we are projecting, what's unique about this opportunity is because of the way in which we have structured it with the preferred equity provider, the depreciation that would otherwise go to the preferred equity provider comes to us. So you're going to get 90% of your invested capital will be covered by depreciation. So we have people putting in 7 figures who want that depreciation. Cash flow slides. Here's my contact information. We also have some stuff on other projects we've done in the past, etc. Happy to share this deck with whoever wants it. I'll put my contact information in the chat as well. So, any questions?